So Cathie Wood of ARK Invest recently released a podcast video on her channel titled Innovation in a Recession, where she basically touched on the fact that Wall Street may be heading into a recession. Now this comes right after we just heard the announcement from JP Morgan scrapping the idea of the US economy heading into a recession. Now Cathie Wood is not someone that I agree with eye to eye every single time. However, what she recently said in this video pretty much mirrors some of the things I've been telling the Push and Profit private group for a while now, and I encourage you guys to watch this video in its entirety and really hear out some of the things that Cathie Wood is saying.
The inflation rate is coming down so rapidly now that what if we're at 5.5% on the Fed funds rate and 0 on inflation by the end of this year? Which we believe is a real possibility. That would be a 5.5% real rate. And we haven't seen those since the 80s, when the Fed was all about fighting the return of double-digit inflation. That's not where we are right now. So I think that what's going to happen in the next few months, as inflation continues to come down, is that more and more people will be talking about this real rate, which is really starting to mount. And I think it was healthy to hear Chairman Powell refer to monetary policy as restrictive. So half of the solution is understanding the problem. If he thought monetary policy was still too easy, that would be a big problem. So if you look at M2, you can go back to August of 21 and see the same level. And the other thing that I think more and more people are discussing is what Milton Friedman taught everyone, and that is that monetary policy impacts the economy over, and these are variable time periods. I think at times he used 6 months to 18 months. Well, right now we're at about that 18-month period, and we haven't hit a clear-cut recession. We've had rolling recessions, certainly housing and autos, manufacturing, and so forth, but we haven't hit the big one, the recession. And in fact, what's happening, to many people's surprise, is inflation is coming down faster than they have expected. A lot of people were of the view, like Larry Summers, and I think he's still there, that we are closer to a 70s style inflation than most people think. We disagree entirely. And I think many people who follow Larry and others are surprised to see inflation coming down so quickly. And so we're hearing talks of the Goldilocks economy. Goldilocks economy meaning a soft landing in response to monetary policy, and inflation coming down to that 2% area. And then we're on our merry way. But if money and monetary policy, money, interest rates do impact the economy over an 18-month period, well, here we are. If this is the start, what could that mean? Well, it could mean a couple of things. How would we get our soft landing? Well, if prices went down and companies were willing to accept lower margins without firing people. Right now, they're hoarding people, and we can see that from the latest employment report. But if they were willing to accept much lower margins as prices come down, then I think we'd have a soft landing because the unemployment rate would not go up. Now, I don't think that's going to happen. I'm very pleased to see inflation doing what we thought it was going to do, but it only means that monetary policy is that much tighter. And I do think that companies now grappling with margin pressure are going to start making tough decisions about employment, especially if the grips of monetary policy get stronger as real interest rates go up.
So what she's saying is that inflation has rapidly cooled off and the economy has still yet to feel all the rate hikes that the Federal Reserve has done. Now we know that one of the things that is keeping us away from a recession is obviously the robust labor market. But what happens if, these companies start laying off their workers because they don't want to have their margins compressed? Well, that could put us into a recession. Now I want you guys to listen to what she says next over here.
But one thing we are seeing, and I think is really important, is the average work week is going down. So it went down 0.3% in July. And what that tells us is that companies are still hoarding labor. They're afraid to let employees go because they had so much trouble attracting them in the last couple of years, especially in and around COVID. So I do believe that they're going to face severe margin pressures as they hoard labor and their pricing power diminishes even more. So I believe that the average work week has not been this low since at one point in 2020 during COVID. So that gives you a sense of the labor hoarding. The employers don't want to lay people off. They'll just give them fewer hours to work. Average hourly earnings were up 0.4%. That was a little higher. Again, the Fed's watching that. Others who are very focused and remember the 70s style inflation are focused on wages because wages went up and pushed through into inflation because monetary policy accommodated. Money supply growth certainly wasn't negative at any point during the 70s. So 0.4%, and we're hearing about these settlements either before or after strikes. Very big numbers, 10% for some of the airlines and perhaps other manufacturing industries. I've heard 8 to 10% a number of times. Well, the difference between here and the 70s is, yes, monetary policy accommodated those wage increases, and we ended up with double-digit inflation. Monetary policy is not accommodating these wage increases. And so that what that tells me is there are severe margin pressures awaiting the companies that are agreeing to these kinds of settlements.
Now, one of the things I've been telling the Push and Profit private group for a while now in our daily briefings is the fact that right now in this earnings season, we're seeing a lot of companies hit and a lot of companies miss on their earnings. But as we go into the third quarter for earnings, well, that's where we're going to start seeing things a little bit more rougher. And right now, obviously, the companies that are hitting, it's not really that they're really beating their expectations, is that expectations have been revised down so far that's allowing these companies to even seem like they're beating their expectations. But of course, things are not looking good. And when it comes to looking to the earnings, there's a lot of nuance. In fact, that's the reason why Apple beat its earnings. But when you really parse through the data, Apple actually did not do so well, and that's why investors sold a lot of Apple after the recent earnings report. But I want you guys to pay attention to what she says next over here.
It's been very interesting to go through this earnings season and to hear the media say, oh, better than expected, better than expected. What happens during a quarter is companies throw out hints and analysts take down their numbers and companies lower expectations to such a level that they beat them. And you'll see, 70, 80% of all companies are beating their revenues and earnings. Yes, that's because they've come in so much based on various kinds of guidance.
Now, again, I don't always agree with Cathie Wood's 100%. However, I want you guys to listen to this next portion over here as well, because this tells a good story, or really the full story of what's looking to go on next.
So let's go on to markets now. What are they saying? Well, the equity market is buying into this soft landing, inflation coming down, interest rates coming down. It's looking over whatever the Fed is doing or saying now and is basically saying, hey, these inflation rates are coming down. so rapidly that the Fed will have to follow them, especially now that that Chairman Powell has used the word restrictive in terms of monetary policy. That is a setup. And as I mentioned before, I doubt it's going to be soft because I think the margin landing is going to be hard. And if companies are willing to accept it, then and not lay off people, then the economy will not go into a recession. But I don't think that's going to be the case. I do think they're going to cut labor because the full impact of monetary policy has yet to be felt. If it's an 18-month lag, up to an 18-month lag, we could be, given that the last rate increase was in the last 10 days, we could be experiencing the impact of tight monetary policy for the next 18 months.
Now, I want to go ahead and cover a bit more and look a little bit deeper into Tesla stock. But before we do so, I want to highlight what recently happened in the Push and Profit private group with some trade ideas that we called out. So on Friday's trading session before the market opened, I called out a trade idea to get 327.5 puts on Microsoft once the price is greater than $334.10. And I've highlighted that there was a lot of selling activity on the options flow. Now, when we take a look at Microsoft for that Friday, we saw that it pretty much 2 times hit our price target for our entry to start shorting Microsoft, and if you would have taken that trade, you would have made some decent profits. So if you guys want to get access to my daily briefings where every single day I call out some trade ideas as well as covering what's going on in the overall market, which right now is really aligning with what Cathie Wood has said, make sure to check out the first link in the description below. But with that said, let's go ahead and hop into my laptop and talk a little bit more deeper when it comes to Tesla. Alrighty, so we are officially in my laptop taking a look at Tesla stock. Now I want to let you guys know that my speech is pretty slow in this video simply because I'm fighting a flu. Although some individuals may actually prefer that because oftentimes on my videos I get comments saying I speak very fast. So this this actually may be a better pace for a lot of individuals. I think part of the reasons why I speak very fast is because I did live in New York City for quite some time, and obviously that's one of the fastest speaking cities in the entire nation. So I think I did pick that up. But, let's go ahead and talk about Tesla. So we saw that Friday we had a lot of selling pressure, pretty much sold down. We rallied up a bit, and then we continued falling down. And then I want to go ahead and talk about what happened Thursday. So I'm going to give a quick recap of what recently happened, and then I want to go ahead and provide my overarching view on Tesla, right? So before Thursday, or on the 3rd, right, we saw that Tesla had quite a few days of selling off, right? And I've, been telling the Push and Profit private group for a lot of these days, we were going to be taking advantage of the market by shorting. However, this day, right before the market opened, one of the things I told exclusively in the Push and Profit private group in the daily briefing before 9:30 was that because the market has been selling off quite a bit, it's expected for a bit of a bounce. The market doesn't just continue going day after day after day after day selling off. Eventually, there is some buying pressure that comes in. People start to, buy in. And so I said, one of the things we wanted to take advantage of was the, buying pressure and move things on the way up. And so we saw Tesla stock finally had a green day. If we take a look to the NASDAQ index ETF QQQ, same thing. Overall markets pretty much finally moved upwards. However, things went back down. Now let's go ahead and go back to Tesla, but shift things over to a weekly time frame. So from a technical perspective, Tesla's still getting rejected by this descending trend line. We've been getting rejected from this trend line for quite a bit. And although we've had, finally one green day, right, after a lot of selling pressure, it doesn't mean that the trend is going to 100%, move back upwards. And so what my stance on Tesla has been, I'm bullish on Tesla in the long term, just like Cathie Wood is. I'm talking 2025 and above to 2030. As fundamentally, I think Tesla is one of the best companies positioned in this EV race. And I'll go ahead and touch on that a little further. But although Tesla, fundamentally in the future is looking good, I think right now, just the macroeconomic climate kind of tells us that things are not going to be looking too well. And then when you factor in the fundamentals and the technicals in the short term, well, things are not too good. We saw that Tesla, sold off quite a bit after its recent earnings simply because margins were lower, which, was kind of expected, obviously because of the price cuts that they recently did.
But nonetheless, obviously we started seeing a lot of sell-off, and we saw Tesla stock kind of move down. Now, one of the things I've been telling YouTube, this is publicly on YouTube, is that one of the areas I want to look at when it comes to Tesla, is this early $200 area. Now, why am I fixated on that one area? Well, let's go ahead and talk about a couple of things. Well, when there's very little volume relative to price, right? That's when you see markets move up and down rapidly. Why? Well, because there's not a lot of individuals kind of battling between volume, buying and selling, right? And so when there's very little volume and there's buying pressure, selling pressure, it's going to move the order books up and down. And, you'll see that one of the areas where we see the biggest green candle for Tesla is over here, where there's very little volume relative to price, which is different from your traditional volume relative to time, right? And so one of the areas where we see the most volume relative to price is over here, where we see Tesla moving sideways, a lot of consolidation, right? And that's because obviously there's a lot of volume relative to that price area. So people start buying, people start selling, and it keeps prices relatively in the same area, versus when there's little volume relative to price and there's buying pressure, I'll move up. And if there's an inverse, if there's selling pressure and there's very little volume to price, we'll sell off, right? So I repeatedly say that in a lot of my videos because a lot of people are not familiar with volume profile. And so I try to let a lot of people understand the concept of that. So if you're someone new, hopefully you found some utility with that. If you're someone that watches my videos daily, I apologize for being very repetitive. But, one of the things I've been saying is that, when it comes to Tesla at this early $200 area, we've seen that in the past. It's been a support. It's also been a resistance. And so if Tesla falls down to this area, I want to see, does it hold up around this area where there's a lot of volume relative to price? Because that's where we're going to see, areas of consolidation. And if it starts to show an uptrend bouncing up and confirmation of an uptrend, well, that's when I'm going to go ahead and add more into my long-term position, right, as a long-term investor. But as a short-term trader, right, because I do invest in Tesla in the long term, but I also trade Tesla in a separate trading account in the short term. In the short term, I'm going to be taking advantage of Tesla falling down, right? Now, is it guaranteed that Tesla's going to touch this area? Absolutely not. The market is not going to do whatever you expect it to do. Stocks aren't going to adhere to whatever squiggly lines you draw on the chart. And so one of the things I've been saying is we want to stay very data dependent. Now, we recently had earnings from Amazon and Apple. And then we also got a lot of the job data that Cathie would also kind of mention in the beginning of this video that I shared with you guys. And so we did get mixed job data for this week. And then also with the earnings with Apple and Amazon, they both beat earnings. But at the end of the day, when you really look into Apple, a lot of their products actually missed their earnings revenues, right? We saw iPhone sales were actually not as good. And so we saw Apple stock pretty much fall downwards, right? Look at this big red candle, sell off tremendously, while inversely, Amazon actually did very well, right? And so this was mixed data. And the reason I say this is because Apple and Amazon, they're big mega cap stocks, and so they have a huge weighting on the overall market. So why does this really matter to Tesla? I saw someone comment, why are you talking about Apple and Amazon? I want to know about Tesla, right? Well, one of the things you have to understand is that because Apple and Amazon are such big mega cap stocks, they have a huge weighting on indexes, right? And so depending on how they do, they could shift the sentiment for the markets, right? And so it was very mixed because, Apple did bad, Amazon did good. And so we really couldn't go off of that. And then the next thing was the job data. And the job data ended up being mixed. So we had, some bad news, some good news. But what are some things that we want to absolutely parse through going into next week? Well, that's going to be the CPI report, right? I expect the news to be positive, that inflation still is coming down. And so, that's going to provide us some opportunities where when Tesla is going to be further down, we may be able to take advantage of a swing up just like we did for the 3rd of August, right? So that's going to be another opportunity. But does that mean that it's absolutely going to shift the direction of Tesla? I don't think it's going to shift the direction just if we have a positive CPI report. I think it is going to give it a little bit of a bounce, but we also have to see if it does move up, well, is it going to get, rejected around over here, or is it going to break through, right? I like like to have a bull case and a bear case for every scenario. I think when it comes to trading or investing, whatever it is, whatever vehicle you choose to really enter or participate in a market with, you want to absolutely have a plan, right? I think too many people fail because they don't have a plan on what they're doing, even when it comes to investing or even when it comes to trading. And so if we do have a positive CPI, the markets react very positively, and Tesla does move up, I want to see, does it break above this trend line, or do we get rejected? Because if it does get rejected, well then again, I'm going to continue shorting in the short term, especially as we enter into the next earnings season for the third quarter. And you heard Cathie Wood say something that I've been telling the Push and Profit private group, that we're going to see margins compress, and that's going to really determine what's going to happen, because there's two scenarios, right? Either these companies allow their margins to compress even further, right? Which means their stocks are going to fall down because investors are going to be like, oh, well, margins are not as great as they were. I want to sell off, right? Because obviously investors in Wall Street, they look quarter over quarter. They don't look annually, 10 years or 5 years, whatever the plan is, right? They look at quarter over quarter. So there's going to be selling pressure if that happens. So there's two options. So, these companies may allow their margins to compress in the short term and kind of stop a recession. Or like what Cathie Wood said, these companies are not going to want to see their margins compress really far going into Q3, because of course they want to please their stakeholders and their investors. And so what are they going to do? Most likely they're going to lay off their employees, right? And so that's what's really going to spark the potential recession, because everything has been pointing to a recession. I've told the Push and Profit private group, I sent charts daily, looking at the leading economic index, right? And, things have been I'm not going to show a photo of the leading economic index right now. There's too much work. I just leave it as it is, but pretty much has been going down, right? And so the only thing that's been really helping the economy has been this labor market. But if, again, these companies don't want their margins to compress, they're going to have to, shed their employees to still do well. And, obviously to look good for the shareholders. But what happens when we have, a bunch of people get unemployed? Well, that means that the consumers are less likely to go ahead and start purchasing because they're out of a job. And when they're out of a job, that's going to bleed into corporate earnings, right? And so either case, I don't think that a soft landing is really possible, like a lot of people are believing the Fed is saying, right? I think, the closest thing that we're going to get into a soft landing is, if a plane lands soft, right, and we're using this analogy with the economy, it would be because it landed in the water, which is not such a hard surface like concrete. But just because you land in the water doesn't mean that the people won't drown. And it's a very unique analogy. I haven't heard anyone say anything like that, but that's pretty much what I'm getting at. So we'll go ahead and I'll continue updating individuals on the Push and Profit private group, what's going on daily. Of course, if you guys can't join the Push and Profit private group, which is the first link in the description below, I also have a free weekly newsletter, so you guys could take advantage of that. But we'll pay attention. If Tesla does so happen to break above this descending trend line, then hey, I'll go ahead and add more into my position, as that's confirmation of an uptrend, and things will look good. But in the meantime, things are not pointing to that direction. But again, we always want to stay data dependent and have a holistic approach when it comes to the market. And I'm going to go ahead and end the video here just because I'm not really feeling well. But hopefully you guys found some utility in this video, and I'll see you guys on the next video. Take care.